June 30th, Stock Playbook. Again, this is just a sample video. Come to our site, thestockplaybook.com. We have tons of stuff we could teach you, different trading setups that we have, earnings plays, things of that nature. Today, Dow Jones up 152 points, NASDAQ Composite 33 points, 1.2%, S&P 500 13 points, 1%. All three indexes reclaimed their 50-day moving average. All of them were on light volume. We got a 3-day weekend that most people are going to turn into a 4-day weekend tomorrow. When I say most people, I'm talking about professional traders. We got the end of QE2 today. We got the end of a quarter window dressing. I've been saying it for the last 3 nights. Path of least resistance is lower. We're going to start meeting into some resistance here. We could continue a little bit higher, but next week when everybody's back in front of their screens and focusing on what they need to focus on, I think we start heading lower. That doesn't mean there's not money to be made. GNC, we love the stock as an investment. Broke out, hit a new high today. MKTG. Responses moving up, got within, I believe it was a penny of hitting a new high today. It was 2 pennies. Volume's not heavy, but this is a stock we looked at when it was down here at the bottom of the range. This is a nice move. 15 to 17. You talk about almost a 20% move. Take some profits. I like responses longer term, but if this market rolls over, all of these will come back. Green Dot and Net Spend, 2 ideas we shared with you yesterday. Both of them ended up popping today. With the market rally that we've just experienced, there's Net Spend getting to the almost $10 area. With the advance that we've seen in this market, it is not prudent to be chasing this pop. Wait for a sell-off if you're bullish longer term. That's when you buy stocks, when they pull in. When you get a lift like this, especially when it's on light volume, you look to short into that strength. 2 stocks that I've mentioned before in here, Apple Computer last night, 50-day moving average acting as resistance, and Netflix, NFLX. Both nice short candidates, I think, with a tight stop in place or an upside hedge in the way of buying an upside call. I get emailed all the time. I don't understand shorting. On our website, we go into this stuff extensively, but as quick as I could do this, let me explain. When you short a stock, you're just selling it before you're buying it. You know, it's that simple. You buy a stock in hopes of it going up so you could sell it and at a higher price and make money. Shorting a stock, what you're doing is selling it first in hopes of it dropping in price. You buy it back, replace the stock you borrowed at first, and you make the difference. People say, well, who are you borrowing it from? Is the broker on the other side? Not the case. When you set up an account, whether it's with a brokerage firm or an online, whether it's Charles Schwab's, E-Trade, Options Express, whoever you use, there's paperwork that's got to be filled out. When you buy a stock, let's say you buy X amount of shares of any stock today, you don't sit there and wait for them to send you a stock certificate. In those long documents that you fill out and you sign saying, you agree to all these terms and agreements, what you're saying is that you're going to hold your stocks in street name, which means it's just a journaling. You own X amount of shares. The company, the firm that you're dealing with is your broker. They hold all of these stocks. Okay, there's no actual certificates going back and forth. It's electronic paper that goes around. In that little piece of paper that you sign, it says that you will let the firm who acts as your transfer agent, your agent, you will let your broker dealer lend your securities out to anybody for shorts. So that's where the stock comes. It's just a pool. So sometimes you go to short a stock like LinkedIn. Is a perfect example. You go to short stock like LinkedIn, you have a Charles Schwab account. There's no stock available to be short. That's because they don't have any stock that's owned. When it usually an IPO or thinly traded stock, there's no stock to borrow. You can't just short any stock. You have to be able to have it borrowed. The way you borrow it, somebody else with an account at that firm that you're dealing with also has the stock. They never lose it from their account. It's just there as collateral, for the lack of a better word. So you short a stock And it's that simple. So you got Netflix, NFLX. You deal with Charles Schwab. You know, I'm trying to pull up the NFLX chart. You have an account at Charles Schwab. There's millions, hundreds of thousands of people who own shares in Netflix. So you decide you want to sell 100 shares short. You put it in order, sell 100 shares short. Your account gets $26,269 placed in it. It's not free money. You got to have money in your account margin, meeting your short requirements. But you short it, you get $26,000 credit in your account, and now that firm just lent you the stock. If the stock drops to 200, you buy it back again for 20 grand. You made yourself $6,269. If it goes up and the stock goes to 300, well, now you're losing money. So it's very dangerous to short if you don't, have the downside protected. That is a very brief, very, very brief explanation of how shorting stocks. It's not necessarily somebody. There's always somebody on the other side of your trade. Whether you're buying it or selling, there's always somebody on the other side of a trade selling or buying. You never know who they are, but that's just the way the game is played. It's paper. It's just electronic pieces of paper that get shuffled around. There really is no reason to understand who's on the other side. There's somebody on the other side. That's all you really need to know. You buy stocks in hopes of them going higher. You sell them for a profit. You short stocks in hopes of the price coming down where you can replace the short and you make the difference. It really is that simple. That's it for the stock playbook tonight. Again, this is just a sample of what we do nightly. We do webinars each month. We do tutorials. We have a course that we're working on. Check out our site. I think you'll be impressed with what we have to offer. Have a good night. I'll talk with you tomorrow.